Thank you everyone for joining today. I'm going to give everyone a chance to ask questions at the end of the presentation, but if you'd like to type your questions in the Q&A, I'll certainly address those also, or if you just want to make a note and ask questions at the end, that's great as well. Today we're going to discuss your Group Variable Universal Life Insurance Coverage, or GVUL. The goal of this presentation is to provide you with the knowledge and tools regarding your GVUL benefit so you can determine how this fits in your financial portfolio. So what are the benefits of GVUL? GVUL is one policy that has two benefits. The first benefit is the life insurance portion, also known as a benefit for your beneficiaries. This provides financial protection for you and your family and helps to maintain the lifestyle that they're accustomed to in the event of a claim. The second benefit is the investment feature. Initially, these types of life insurance policies were created so that policyholders could build cash value in order to pay for their premiums at a later date. We now call this the living benefit because the investment feature allows you to add money to your policy at your own discretion into a separate fund, and you have access to the money while you're still living. These funds can be used at any time for any reason. It's important to note that GVUL is permanent portable coverage and not term insurance. If you continue making premium payments, your GVUL policy can remain active until age 95. You're the owner of the policy, so you'll also receive your own policy and certificate number. And the contract is between you and MetLife. We'll look at a difference between term life insurance compared to GVUL in a future slide. Some additional benefits of your GVUL policy are: this is a tax-free benefit for your survivors. Your GVUL policy is portable, which means that you can continue your coverage to age 95 even if you leave or retire from Maritz. You don't have to go through any additional applications or underwriting in order to keep the same level of coverage. Also, the rates remain the same as an active employee. Portability includes your life insurance coverage as well as any cash value that you may have built up in the policy. GVUL combines life insurance with a tax-deferred investment feature with access to 25 variable investment portfolios, along with an interest-bearing or fixed account that has a 4% minimum guaranteed rate. You can withdraw cash value up to the amount of your cost basis tax-free, and there's no penalty for early withdrawal prior to age 59 and a half. The tax-deferred investment opportunity allows you to build cash value that you can use during your lifetime for future needs such as education or medical expenses, building a home, vacation, or investing for retirement. It's easy to invest through payroll deductions or by contributing a lump sum at any time. An investment can be started or stopped at any time. There are no coverage reductions due to age. Also, if you're reaching your qualified plan contribution limits, you can use this investment feature of your GVUL policy as a vehicle to supplement your retirement savings. Now that we know some additional benefits of your GVUL policy, the next question is usually, how much life insurance do I need? Some items to consider when asking yourself this question are: will I need to provide an income stream for my dependents, and for how long? What outstanding debts such as mortgage, car payments, credit cards will need to be paid? What future expenses such as a spouse's retirement or a child's education should be considered? You can access your life insurance calculator to help make this decision at mybenefits.metlife.com. Once you've determined the suitable amount for yourself and your family, we highly recommend reviewing your coverage amount and your beneficiaries each year, as we know situations change over time. Now let's look at the GVUL coverage available to you. Maritz generously provides you with basic coverage of 1.5 times your salary up to $250,000. You have the option of adding to this foundation by electing supplemental coverage of 1 to 5 times your salary up to a maximum of $1 million. That maximum is your basic and your supplemental combined. I do want to point out that basic and supplemental coverage are included under one GVUL policy. So it's one policy that includes both basic and supplemental coverage. Spouse coverage is a rider on that GVUL policy, and it's available in $25,000 increments up to $100,000, not to exceed your coverage. And child coverage is available in amounts of $5,000, $10,000, or $25,000. Children are covered from 15 days old through age 25, and one child rider covers all eligible children. You should notify MetLife when your youngest child is no longer eligible. In addition, if you're eligible to enroll for GVUL due to a promotion, you'll receive replacement of any previously existing term supplemental independent coverage as guaranteed issue, meaning no medical questions are required. You may enroll or review your coverage by accessing the mybenefits.metlife.com website displayed here between now and May 15th. This website is where you will enroll or request changes to GVUL coverage, elect investment to build cash value, and update your beneficiaries. Now let's discuss the investment feature of your GVUL policy in more detail. As mentioned, GVUL is one policy that provides both life insurance and an investment feature. This investment feature is 100% optional and is not mandatory to keep your GVUL policy. You can elect to invest at any time, regardless of whether you elect during your initial enrollment. You can update your contribution amounts or your fund allocations at any time throughout the year. There are a couple of different ways that you can invest, either by electing monthly contributions through payroll deduction, or you can make a lump sum payment by mailing a check directly to MetLife. You're going to hear me reference cash value in the next few slides. I want to point out that the only way to build cash value within your GVUL policy is by taking advantage of the investment feature by contributing additional money above the premium due for life insurance. With this plan, you'll be offered a wide range of variable investment portfolios that suit many different risk tolerances. You can choose conservative investments, or if you're more aggressive, there are growth-oriented portfolios available as well. If you'd like to review the details of each portfolio, you can log on to the mybenefits.metlife.com website and read about each portfolio's investment objective, the portfolio composition, and you can view statistics and general information. In addition to the 25 variable investment portfolios, there's also an interest-bearing account, or a general account, or fixed account. You may hear this referred to in several different ways. What's great about the interest-bearing account is that it provides the minimum guaranteed rate of 4%. Your GVUL policy also allows tax-free transfers within the various funds. Transferring allows you to move your money between funds without paying capital gain tax. One thing I do want to mention is that if you're transferring money out of the interest-bearing account, you can only transfer up to 25% of the total funds out of that account per year. There are two charges that I need to discuss, which are the premium expense charge and the withdrawal fee. For every contribution that you make into the investment portion of your GVUL policy, there's a 2.25% premium expense charge. For example, if you choose to put $100 into the investment feature, after the 2.25% expense charge, you would see $97.75 applied to your account. Withdrawals from cash value are subject to an administrative fee of 2% of the amount withdrawn, not to exceed $25. So you would never be charged more than $25 for a withdrawal. Key features of the investment option provided with your GVUL policy are the variable investment options plus the interest-bearing account that provides the minimum 4% rate of return and the tax-free transfers previously mentioned. In addition, earnings within your policy grow tax-deferred. Unlike some other investments, there's no capital gain tax on any of the earnings inside of your GVUL policy. Any money that you invest is after-tax dollars, and that maximum amount that you can contribute is based upon your age and your life insurance coverage amount. Remember the living benefit I mentioned? You have the freedom to access your cash value when you need it for any reason with no early withdrawal penalty. But keep in mind that withdrawals will reduce your cash value and death benefit. The IRS does set contribution limits based upon age and coverage. If the funding of the certificate exceeds certain limits, it could become a modified endowment contract or a MEC and become subject to earnings first taxation on withdrawals and loans. MetLife monitors this and will notify you if a contribution would ever cause your certificate to reach the maximum limitation prior to it becoming reclassified as a MEC. And finally, you can take tax-free withdrawals of cash value up to your cost basis. So what is cost basis? Cost basis is all of the premiums paid for the life insurance plus any investment dollars that you contribute. Cost basis also includes the premiums that Maritz pays for your basic life insurance. You can withdraw any amount of cash value up to your cost basis tax-free. Let's look at cost basis just a bit further. So cost basis are the total GVUL premiums paid, including any premiums paid for life insurance and extra contribution for investment. Sorry about that. I advanced just a bit too quickly. Let me go back. Cash value is the sum of your additional investment dollars plus the difference of any earnings or losses of that investment money. And the tax advantage is that cash value can be withdrawn up to your cost basis tax-free. Only cash value may be withdrawn. It's important to understand that you can only build cash value if you're contributing investment dollars above the cost of insurance, and cost basis is only a valuation used to determine the taxability of any withdrawal. So you cannot withdraw your cost basis. It's just a value to determine taxability of any withdrawal you may take from your cash value. This is an example of how cost basis works and how GVUL is different from term life insurance. The left side of your screen is demonstrating a person that purchased a term life policy and chose to invest after-tax dollars outside of the life insurance in a separate investment account. Since those products are completely separate from each other, the premiums paid for the term life insurance are an expense and only provide for the life insurance protection. The money that this person is paying for the term life insurance premium is only for the cost of insurance, and it's not adding to their cost basis. In addition, the dollars contributed to the separate savings account generate interest earnings taxable in the year earned. The right side of this example shows how GVUL may help you satisfy your life insurance and savings needs in one product. The insurance premiums go into the product and provide life insurance protection for your survivors. Cost basis includes the premiums for the GVUL insurance coverage, plus any money contributed to the investment feature, as well as any premiums that Maritz pays for your basic coverage. And earnings within your GVUL policy grow tax deferred, and you can withdraw up to the cost basis tax-free. And we're going to look at one more example. For illustration purposes, this example is based upon a current crediting rate of 3% for the interest-bearing account. Let's assume an employee at age 40 identified a need to provide $250,000 of life insurance protection. Over the course of 25 years, total premiums of $19,610 were paid for this life insurance protection. This employee also participated in the tax-advantaged investment opportunity to help provide for future expenses by contributing $148 per month. Over the course of 25 years, the total amount of money this employee invested was approximately $44,550. Premiums for life insurance, both basic employer paid and supplemental employee paid premiums, plus the additional investment dollars, are included in this amount we call basis or cost basis. So the cost basis is $64,160. At the end of 25 years, the interest earned in the account was $19,491. Their extra premium for investment, plus the interest earnings, total available cash value of $64,041. So again, that's their investment plus their earnings gives them a cash value of $64,041. If this employee decided to withdraw the entire cash value for any reason, they could withdraw the total $64,041 tax-free since it's less than the cost basis. If this employee were to pass away without making any withdrawals, the beneficiary would receive the $250,000 of life insurance coverage plus the $64,041 as their death benefit. If the employee were to withdraw $4,041 of their available cash value while they were living and they later passed away, their beneficiary would receive the $250,000 of life insurance plus the remaining $60,000 of cash value for a total death benefit of $310,000. So I just want to point out that any withdrawals will reduce the cash value and the total death benefit. Again, please note that cost basis, or the total of all premiums paid into the policy, is not available for withdrawal. It's only a measure to determine taxability of any withdrawals. We've talked about the withdrawals up to your cost basis being tax-free, but what if you have earnings in excess of your cost basis? Any withdrawal in excess of cost basis is taxable. If you do have earnings that exceed your cost basis, these funds can be left in the policy and used in a few different ways without owing any taxes. You can take a loan up to 85% of your available cash value. Collateral is credited at 7.25% interest, and loan interest is charged at 8%. So for a net of 0.75%, you can take a loan of your cash value. Please note that outstanding loan amounts can have a permanent effect on certificate values and benefits. If you take a loan, I suggest setting up an ongoing payment plan to pay back the balance of the loan. Again, this policy is portable. You can use your tax advantage cash value to pay for future life insurance premiums. You can use that additional cash value as a wealth transfer mechanism. If you do contribute additional premiums and build cash value, your beneficiaries will receive the life insurance benefit plus any additional cash value income tax free. And there's also an annuity option. If you retire or leave Maritz and you have at least $5,000 of cash value, you can convert your cash value into a fixed income annuity. If you'd like to learn more about your investment options and how to best use them to help you meet your personal financial goals, MetLife has tools and resources available to help. You can find online educational and needs assessment tools on the website. The Power of Tax Deferral compares the monetary benefits of a tax-deferred account versus a taxable account, and the risk tolerance assessment will help you assess your individual risk tolerance and investment philosophy. You can access these tools at any time at the website displayed here, mybenefits.metlife.com. This is the same website that you use to enroll, invest, and update your beneficiaries. Speaking of beneficiaries, as a reminder, you should name a beneficiary of your GVUL policy. This ensures that MetLife will distribute the policy proceeds from your GVUL insurance policy the way you want after your death. If you don't name a beneficiary, or if your beneficiary passes away before you, your life insurance proceeds will be paid in accordance with the provisions in your certificate. Please take time to review and update your beneficiary, even if you don't wish to make any changes to your coverage. At this point, let's recap some of the special features within GVUL. Again, GVUL is one policy that provides two benefits. There's the permanent enhanced life insurance protection that you can continue even if your employment situation changes or you retire, and the flexibility and control to change with you as your needs change over time. And second, GVUL offers a tax-deferred investment opportunity that can be used to build cash value, which you can access at any time for any reason with no surrender charges or early withdrawal penalties, provided it's a non-MEC contract. Withdrawals are tax-free up to your cost basis. As you consider GVUL more carefully, please reference the prospectuses, which can also be found on the website and during enrollment at mybenefits.metlife.com. They contain more information on the product, including charges and expenses. You should always read the prospectuses carefully before investing. Please access the mybenefits.metlife.com website to enroll, invest, or update your beneficiaries. Thank you very much for taking the time to attend today's session. Does anyone have any questions? Please feel free to unmute yourself if you would have any questions.
If you're already enrolled, you don't need to re-enroll. You can just update information as needed. Is that correct?
That is correct. Once you're enrolled and your premiums are paid, you're always enrolled.
Okay.
So you don't have to enroll again at every annual enrollment, but I would recommend reviewing your beneficiaries to make sure that they are what you desire.
Okay, thanks.
Absolutely. Any additional questions?
Will this deck be shared with us? I joined a little bit late, so I think I missed a few slides.
Yes, I'm actually recording this session and it will be posted.
Perfect, thank you.
If anyone should think of any questions after the presentation, or perhaps even after watching the presentation again, I do have our GVUL representative phone number here listed on this final slide. It's 800-756-0124. They can answer any questions you may have about your GVUL, in addition to if you have questions about the investment feature or you'd like an illustration run for a personalized illustration, they can request that for you as well. Any additional questions? Well, thank you all so much for attending today. I will stay on the line for a few moments. If anyone has any additional questions, I'm happy to help.
Thank you.